Thank you, Mark, and a big hello from London. A lot of technical action this past week. To start with, in the currencies, we had weekly key reversals down last week in Aussie dollar against the US dollar, Kiwi dollar against the US dollar Philippine peso, sterling rand cross, and perhaps most interestingly in euro against the dollar. In the Aus and Kiwi dollar, well, we have seen an immediate, if limited, follow-on lower, but not in the sterling rand cross, though here we are still within last week's range. In US dollar Philippine peso, well, we had an immediate reactionary move back up, gapping higher between Monday and Tuesday. Interesting, but instead I'd like to take a closer look at the euro dollar. Here we have seen a follow-through lower this week to the weekly key reversal down, though this has been limited for a specific series of reasons. You see, recently in my commentaries I've highlighted the November 2022 to early January 23 bullish shift pitch fork as the key driver in this market. The upper time, currently at 110.10, had capped the prices throughout January, and last week's weekly key reversal down framed the lower time below, currently at 106.41. However, the lower time has since late January had the added support ahead of it and above of the rising short medium moving average, running a little above and close to it, and that's currently at 106.74. And it was this that stopped the follow-on lower yesterday to the weekly key reversal down made last week. Thus, at this moment, though we have had a weekly key reversal down last week, the superior pattern of the bullish shift pitch fork is still running the overall market higher for now. We also had weekly key reversals up last week in US dollar Canadian dollar, US dollar Swiss, US dollar Japanese yen, US dollar Danish krona, US dollar Polish zloty, US dollar Romanian lei, and US dollar Mexican peso. In other words, indicating a stronger overall dollar across the world. Of all of these, the US dollar Danish krona has still maintained the move up and out of last week's range, whereas all the others have fallen back within last week's range. However, I'd like to take a closer look at the US dollar Mexican peso, as it shows a similarity to euro dollar, which I find interesting. I'll explain why. In US dollar Mexican peso, we have seen an overall fall since July last year, with some occasional blips higher. These blips have been useful to me, as they gave an idea of the bearish angle of attack of the market, and thus of the next move lower. Last week, we saw the market drop down through to the combined support of the following: the February 2020 low at 1851.5, the lower time of the March to July 2022 big bearish shift pitch fork, currently 1858.95, and that's seen in dark blue on my daily chart, the neckline of the large January to May 2021 head and shoulders top, currently at 1866.20, and that's seen in bright green on my daily chart, and of all things, the broken upper time, currently 1861.80 of the old March to July 2022 big bearish Andrews pitch fork. All these managed to hold and revert the market back up. And here's the interesting bit. The follow-through higher on Monday to last week's weekly key reversal up was capped by the same short medium moving average, currently at 19.22 even, that we saw in the euro dollar. Finally, in all the currencies, there was a very interesting series of events in the Chinese yuan. You see, with the onshore Chinese yuan, the USDCNY, there was no weekly key reversal possible, as 2 weeks ago we had a week-long Chinese New Year holiday, and such a pattern was not possible and would not have worked if applied to the prior week, even if that was applicable as a pattern. However, in the offshore Chinese yuan, the USDCNH, there was no halt in trading, nor in the NDFs for the onshore Chinese yuan. Thus, the USDCNH, the USDCNY 1 month and 1 year NDFs, all three had weekly key reversals up. On these three, there was a limited follow-on higher on Monday, but since then prices have come back down, though today they are beginning to look a little bit more dollar bullish right now. Elsewhere, we had a weekly key reversal down in both spot silver and spot gold. However, there has been no follow-through lower in either. Indeed, in spot gold, the market has become entangled amongst the lower trend line, currently at 1877, of the November last year to January this year ascending wedge pattern, which is an interesting development for the future. we had a weekly key reversal up in the UK FTSE Stock Index Futures, right at the all-time high of the market made back in May 2018. Indeed, this week there has been a cautious follow-on higher. New all-time highs, but very, very cautious. Now, I have no issue with this other than to highlight the time crossovers, one being tomorrow, the 9th, and one on Monday, the 20th. They are circled higher up on my daily chart. Time crossovers, or rather soon after time crossovers, you may see one or more of the following: a change in trend, a reinforcement of an existing trend, and overall volatility. So watch out. The only issue is that such a pattern was not repeated in any other stock index or stock index futures that I follow. In fixed income markets, there was a weekly key reversal down in US T-note futures, which have had a nice follow-on lower this week. In commodities, we had a weekly key reversal down in Bursa Malaysia palm oil futures, which immediately failed, for gapping open higher on Monday, though the pullback has been limited, sort of. However, and more interestingly, there was a fascinating development in Chicago soybean oil futures. Here, we saw a likewise weekly key reversal down, and as in palm oil, a reversion back upwards. However, there was fascinating thing here. It was delayed in recovering compared to palm oil, plus the small follow-on lower on Monday was enough to reach target X at 58.82. This was the previously highlighted by me harder to reach secondary target for the ascending wedge pattern formed in December last year. You can see it highlighted in green on my daily chart. What is of additional interest is that the action over last Friday through to yesterday seems to have formed a possible 3-day bullish morning doji star pattern. Hence it seems the market might have done just enough to fulfill reaching the targets below for the ascending wedge pattern before turning back up. We shall see more on this, as I will be working on this in tomorrow's oilseed and veg oil commentary video. Finally, there were two other weekly key reversals last week. A weekly key reversal down in the Baltic Panamax Index, which has seen a follow-on lower this week, making new lows not seen since June 2020, which is very nice. And for the TikTok generation out there, a weekly key reversal up in AMC stock of the US. This had a limited follow-on higher at the start of this week, but has since come back down, though we are still within last week's range, and more importantly, still over the gapping higher move made during the middle of last week between 579.5 and 593. Now, I'm always happy to answer any direct questions of anyone who's interested. And with that, I'll finish this section from London. I hope that you found these comments useful.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Topic and ADM Investor Services International Limited. And here comes the final important bit.